Test. Hey, this is NASDOG. We get the best dope on the markets. I am Alan Palmer. We are going to talk gold. We're going to talk gold, silver, and we're going to look at copper. I just had an alarm go off in the aftermarket, okay? In the aftermarket in copper at 621. We closed at like 626 or something like that. And so they're getting hit. This is gold here. Look, we're right on the lows here, down 180 bucks. Okay, this is what it looks like. This is the last week and a half. Okay, this is vertical down. Okay, I've kind of cautioned that this might be a big head and shoulders top. Okay, and silver being silver. But for right now, they're hitting gold. Okay, central banks. I think central banks are selling to pay for petro. So here, I'll give you a couple levels here. Here, 41, call it 20. Okay, for some reason I have this highlighted over here. We sliced through it, okay? As a matter of fact, I could take it off. But sometimes when you get back over those, for example, even if you didn't buy it or you did buy it or you get over it, then you put a stop back under it, okay, for risk placement, with my levels. Good levels, okay? This just happens to be. But anyway, down below here, 40, 21, 40 will be something to watch here in the overnight. That's this low back here, okay? So that's about another 80 bucks, now another 2%. What is gold on the year? Hang on a second here. Let's see. Gold on the year, percent based. These charts are CQG, but minus 7.48%, okay? Actually, yeah, so you'd be down into this 8% area pretty soon here, maybe another 20 bucks actually. And then 39.86, okay? And here, if you need a stop, that's 39.64, or if you buy it at 85, you can put a 45 stop. And I would do it tighter. It's either going to hold or fold, but in the overnight, you get down another 130 bucks, you're going to have, I don't know, I think it'll be panic in the streets. Okay. That is, so that's gold. Okay. And one other thing, because these olive lines, they well, absolutely, it's trading, they can fade. Here it comes down for one bar, and then we break it, okay? Here it's the high. Here you blew over early this morning, okay? Almost 66, and then all of a sudden, here it comes into play. The market settles down. Here they play right under that bar, okay? That's why it's important that you learn time frames. Here's an intermediate picture of silver here. Okay, let's go a little bit longer term here. Maron. Okay, here's a daily. You can see I got a trend line here. Okay, even though this was because that was so big. Here you came through. Here you popped. Okay, this was off the highs. And then you did this. Actually, look at this. Right on a Monday. This is this is a daily chart. But you open right there at that trend line here with a long tail. Okay, and then come back up. But anyway, here's where we are right now. Okay, so we're under a lot of stuff here. And those speed lines going down, they all disappear if you put it in something like this. Because that's why. It's real short term, but then I put it on a longer term chart. Here down below in silver, these are just levels, okay? Instead of say you're like, okay, I'm going to buy it at 63.14. Instead, you might want to price it in $1.50 lower, closer to a level, because these are big markets, okay? I believe we are going to hit all these big levels. That's why bean oil, they had that one where they sold 10,000 right after the opening, or 6,000, and we broke 100 points immediately, and then came back. So this is silver. We're going to look at copper, and then we'll end it. And if I didn't recall off those levels there, you could pause the thing and look at the chart. Study the chart. This is copper, okay? Now, this is interesting, okay, because this is the way I chart copper here. This is a intraday chart, okay? And here, you could see something. We made highs up here, okay? These were highs. We looked at that. No, we didn't look at that. But this is like a triple top up here, okay? We had one back when the tariff was going on, right after, shortly after. Anyway, so here we've been getting these sell-offs here. We got the sell-off. Next day, 8:30 a.m., we gap higher, okay? And this is kind of like crude oil here, you know. During the banker's hours, they want to hedge, okay? And anyway, here, so this was this morning. We opened lower. Here we closed at 6:32. We opened the day session, okay, down here. Okay, I got a couple alibis, and I got another something highlighted here. That's actually a gap, okay? I usually have it in yellow. If you were to get my charts, and these are CQG charts that cost me about $65 a day. So for $220 a month for me to go through here and put all my expertise on, I'm selling you. I'm soliciting you. I'm honest. Research is not the way to go. Anyway, so we open down here, and what do? We go up to a green. We go to alibi to a green. Okay, 630, 347. And now listen, we just got down to 620 here. Okay, in the aftermarket. Okay, so we're gonna have to contend with this, but these markets, okay, the rest of the world could be going into a recession. Okay, not the U.S. Okay, jobs are increasing, pay is increasing, 6.8% for non-supervisory. So much good stuff is happening in the world, but you know what? There's always somebody bigger to be squeezed out, and you just don't want to get taken out at the wrong time. Always use the risk stop to stop the risk. Email me, arp@nasdog.com. Thanks for watching. Have a lovely day. Always use the risk stop to stop the risk. Here, should we do a trader excuse? I only use mental stops because when I use stops, I am always getting filled at the top or the bottom of the market. Have a lovely day.